All right, let's just jump right in. We're going to break down one of the most influential personal finance books of all time, Rich Dad, Poor Dad. And our goal here is pretty simple, to boil down the one core idea, the big mindset shift that has totally changed how millions of people think about money. And we're going to do it all in about 5 minutes.
So here's our game plan. We'll kick things off with the story of the two dads to really get why there's a problem in the first place. That problem? It's a trap called the rat race. From there, we'll get into the one golden rule you need to know to escape it. Then we'll see how to put it all into practice with mind your own business. And finally, we'll unlock the most powerful concept of all, inventing your own money. You know, the whole book is really built on this one simple but super powerful story. Robert Kiyosaki, the author, he basically had two dads. And when it came to money, their advice was, well, polar opposite. Now get this. This idea is so powerful because it just flips a famous saying completely on its head. We've all heard the love of money is the root of all evil, right? But Rich Dad's view was the exact opposite. He believed the lack of money is the root of all evil. It's one of those lines that just stops you in your tracks and makes you question everything. And here is where you see that clash in thinking crystal clear. Poor Dad, the highly educated one, said, "Study hard so you can find a good company to work for." But Rich Dad, the entrepreneur, he said, "Study hard so you can find a good company to buy." See the difference? One path is about being an employee, the other is about being an owner. That right there is the fundamental split. So, why is this one little difference in advice such a huge deal? Well, because according to the book, one of these paths leads you straight into something called the rat race, and it's a trap that most of us don't even see we're in. So what is the rat race? The book describes it as that endless loop so many of us are on. You get up, you go to work, you pay your bills, and you do it all over again the next day. And it's all fueled by two really powerful emotions: the fear of not having enough money, and then the greed, where the desire for more stuff once you get a little bit. And the crazy part, earning more money doesn't get you out. It actually just makes the wheel spin faster. So what's this actually look like? For a poor person, the cash flow pattern is painfully simple. Money from a job comes in, and it goes right back out to cover the absolute necessities: taxes, rent, food. There's just nothing left at the end of the month to build anything. Now, for the middle class, the picture looks a little different, but believe me, the trap is exactly the same. A bigger paycheck comes in, yeah, but it's immediately used to buy things that are actually liabilities, even though we mistake them for assets. I'm talking mortgages, car loans, credit card debt. These things don't put money in your pocket. They take it out every single month, locking you into that rat race, just with, nicer things. So how do you get out? How do you escape? The book says it all boils down to understanding one simple golden rule. This is the idea that once you really, truly get it, it changes the entire game. And here it is. Rule number 1, you absolutely must know the difference between an asset and a liability, and then spend your life buying assets. I know, it sounds almost too simple, but this right here, this is the entire foundation of the Rich Dad philosophy. So what's an asset? Forget all the complicated accounting jargon. Rich Dad's definition is just beautifully simple. An asset puts money in your pocket. That's it. Plain and simple. If it's generating cash for you, it's an asset. And a liability? Well, you guessed it. It does the exact opposite. It takes money out of your pocket. This simple cash flow test is literally the only thing that matters. Does it make you money or does it cost you money? And this right here is where the path of the rich just completely breaks away from everyone else. Their main focus isn't on how big their paycheck is, it's on building their asset column. They take their income and buy assets. Things like real estate, stocks, maybe a small business, and those assets generate even more income. That new income then pays for all their expenses, and whatever's left over gets plowed back into buying more assets. It creates this powerful, incredible, self-perpetuating wealth machine. Okay, so you get the rule. Buy assets. Got it. But how do you actually do that in real life? Well, the next big lesson is to mind your own business. And no, that doesn't mean you have to go quit your job and start a company. It means shifting your focus from what you do to what you own. This is a really key distinction. Your profession is not your business. Let me say that again. Your profession is what pays the bills right now. Your business, that's your asset column. So you might be a chef, you might be a graphic designer, that's your profession. But your business is the portfolio of income-producing assets that you're building on the side. The perfect story for this comes from Ray Kroc,
The guy who built McDonald's. When he was asked what business he was in, he would say his business wasn't hamburgers. His business was real estate. The burgers were just the way he paid for more real estate. He was always focused on the asset.
So what kind of real assets are we talking about here? The book gives a few great examples of things that can generate income for you. Things like rental properties, stocks that pay dividends, bonds, or even intellectual property, like a book or a patent. These are the kinds of things that belong in your business column. Okay, this brings us to the final piece of the puzzle. And honestly, it might be the most powerful one of all. It's the idea of inventing your own money. This is about realizing that true wealth isn't just earned or saved, it's created. And it all starts with the greatest asset you will ever have, your mind. It all starts with a very simple change in the words you use. When you say, "I can't afford it," that's a statement. It's a dead end. It shuts your brain off. But when you ask, "How can I afford it?" well, that's a question. That's a challenge. It kicks your brain into gear and forces it to start searching for answers and opportunities. Because at the end of the day, your mind is your single most powerful asset. The book makes it clear that financial intelligence isn't about being some math wizard. It's about training your mind to see opportunities that others miss, to solve financial problems, and to literally create wealth out of thin air. And look, this isn't just some feel-good theory. Kiyosaki gives a real-life example where he used almost none of his own cash to put together 6 small real estate deals. And those deals created over $190,000 in new assets for him. He didn't earn that money, he invented it, simply by seeing an opportunity and knowing how to structure a deal. And that's really the ultimate takeaway. The rich understand that money isn't really a thing. It's just an idea. Real wealth isn't created by working harder at your job. It's created by using your financial knowledge to spot opportunities, structure deals, and make money work for you. Which leaves us with one final and really important question to ask ourselves. Forget your job title for a second, forget your salary, and just ask yourself, what's really in your asset column?